Welcome to LNG Watch, a Platts video series designed to provide you with insights and analysis on global LNG markets. I'm Max Gostelow, pricing analyst with the Asian LNG team. Today I'm going to take a look at the really weak North Asian end-user demand and the increase in Asia-Pacific LNG production on the spot LNG market. I'll also go over the evolution of the JKM swaps market as volumes continue to take off and grow in liquidity, and how users are finding these products to be effective financial instruments to manage their risk. So firstly, spot prices from February till the end of last year, they were largely range-bound. And while there was some intra-month movement in prices, what was interesting and a bit unusual last year was that there was very little volatility in the spot markets. Coming from a fundamental standpoint, the main reason was the lack of support on the demand side, particularly from the large users of LNG in North Asia, where we are seeing mostly decreasing or slowing demand. While we have seen increasing demand from buyers in the Middle East, South and Southeast Asia, imports into North Asia, particularly into Japan and South Korea, have fallen dramatically in 2015, and they are expected to languish at these lower levels this year. If we take a look at the full year range, the volatility in 2015 was actually the lowest level ever recorded over a year since Platts started assessing the JKM in 2009. The standard deviation in 2015 was 63 cents per MMBTU. In 2016, at the same time as the stalling demand from North Asia, we are also having a lot more production from new projects in Australia as well as the US. So with a lot of these new volumes available and prices dropping quite rapidly since January, people view the market as oversupplied. Essentially, it's a buyer's market, and buyers are looking for more flexibility in contracts. A lot of the buyers also are moving to a more prompt buying strategy and adopting more of a wait-and-see approach to see how low prices will go before they enter the market to pick up cargoes. And the problems come when there's either a shock to the supply or the demand side. And it's shown a couple of times this year already. Even though suppliers have too much supply, every dog has its day. And the market at the end of January, it showed that supply disruptions can still have a very large impact on prices. Prices jumped 15% following the unplanned force majeure at one of Russia's Sakhalin LNG trains. And most recently in March, a lot of these buyers who had demand for April, they all entered the market at the same time. So we had a wave of buy tenders in addition to spot requirements from other buyers, resulting in prices jumping. And they jumped about 10% over a few days to $4.60 per MMBTU last week. And what we saw particularly after Sakhalin went down was a very marked increase in the demand for JKM swaps, as people either hedged or took positions following the outage. So over January to February this year, 1,215 lots were cleared through ICE, and that's up from 136 in the same period last year. Now, February actually saw a record number of JKM swaps cleared during the month, and this demand highlights the importance of a liquid derivatives market for hedging risk and spot price exposure, especially as the LNG markets continue to move away from their heavy reliance on oil-linked term contracts. And the solution to the inherent risk of the physical LNG markets, like limited storage and transportation flexibility, to short-term drivers such as supply shortages or demand spikes, they have really necessitated the growth of the JKM swaps market. Now, a little history of the JKM swaps. We launched the JKM swaps in 2012, and since then we have seen activity rise steadily, with just last year 2,791 lots, almost 10 standard-sized LNG cargoes cleared through ICE, and that is almost 70% up from 2014. Now, in 2015, we also saw the first calendar year swaps transacted in November, with 65 lots of JKM Cal 16 swaps traded during the month. So far in 2016, the JKM swaps market looks on track to experience another year of record growth as more and more parties realize the value added of such a financial instrument to manage their risk. And that's all for this edition of LNG Watch. Do take a look at Platts LNG Daily for all your news, analysis, and insight into the global LNG markets. I'm Max Gostelow, and thank you for watching.